that leave us? Where does that leave us?
I mean, these stocks have had such a nice run. I was just looking at Broadcom in the past year, up 84%. I mean, that's a huge, huge number. It's re-rated. The whole group has re-rated. Are there question marks about maybe the growth isn't as fast as we have been seeing over the last several years? Of course. But there's a couple of stats we got from NVIDIA, and I don't own NVIDIA, but we all pay attention to it. Long term, they see $3 to $4 trillion in CapEx and data center spend between now and 2030. And they did not change that. That they reiterated yesterday. That means your CAGR long term is 40 to 45%. That's still very, very healthy growth. Short term, the data center numbers still growing 17% sequentially from the past quarter that they just reported to next quarter. That's over $7 billion of revenue without China.
I know. Let me stop you 1 second.
No.
Let me stop you 1 second. Let me stop you just 1 second.
I'm just telling you that.
I know. I got you. You asked a question. Is growth not what it was? Of course. So then why wouldn't you say, of course, to the question of, well, then why do the stocks deserve to trade at what they're trading at? Why does the stock appreciation justify itself if the growth rates are going to slow in critical areas like they are for NVIDIA with data center? I know the numbers are still extraordinary.
They are.
They are. However, if you're telling me that the growth is not what it was, why should everything else be like it is?
Well, you're talking about NVIDIA trading at 25 times forward estimates, and they just told us that the industry is going to have a CAGR of 40 to 45%, and they're the number one player in the industry.
NVIDIA's success in the AI business has caused its stock to surge in recent years. Investors and analysts are keen to learn about any advancements that might have an effect on future expansion. Whether you invested in the company 5 years ago and saw it soar 1,200%, or you bought early this year and have already reaped the benefits of a double-digit rise, NVIDIA has produced an incredible return for investors in recent years. You've probably seen your investment increase as long as you've hung with this leading artificial intelligence, AI, firm with the intention of staying with it in the long run. However, if you haven't purchased any NVIDIA stock yet, or want to increase your holdings, you might be searching for a suitable opportunity to enter the market when the stock is cheap and could rise sharply. Therefore, you may want to keep an eye on September 8th, as that is when we might learn the most recent information from NVIDIA. Before then, should you purchase the stock? Let's investigate. Let's start with a brief overview of the reasons and methods that have made NVIDIA a market leader during this AI boom. When the significance of AI became apparent early on, NVIDIA made the decision to change course and concentrate on creating graphics processing units, GPUs, for this emerging technology. The company's GPUs were primarily used in the gaming industry before this. As NVIDIA has emerged as the leading AI chip designer, generating billions of dollars in profits and experiencing double and triple-digit growth in recent years, the plan has proven to be accurate. In order to maintain its first-to-market advantage, NVIDIA has prudently placed a high priority on innovation, staying ahead of the curve in AI chip technology. This AI giant released its most recent architecture, Blackwell, late last year. It is currently releasing an update called Blackwell Ultra. The Rubin architecture is scheduled for release the following year. All of this should support NVIDIA's continued dominance in the AI business, which is expected to grow to a value of over $2 trillion in the next years. Given how quickly AI is developing and how dynamic NVIDIA's story has been thus far, it is not unexpected that investors anxiously anticipate any updates from NVIDIA about potential future developments. This leads me to the topic of September 8th. At the Goldman Sachs Communicopia Plus Technology Conference, NVIDIA will give a presentation. Tech and media firms are invited to the annual event, which is hosted by Goldman Sachs, to share business updates, debate industry trends, and discuss their strategy. Analysts and other attendees will be eagerly watching NVIDIA's presentation for any updates on important topics that could affect growth in the upcoming quarters, like a possible return to selling chips in the Chinese market or any changes to the Rubin release schedule. After stopping NVIDIA's shipments to China earlier this year, the United States has now agreed to provide the business export permits for chips in exchange for 15% of its profits made there. The administration has not yet made public the specifics of how this would be implemented. Regarding Rubin, NVIDIA has stated that the platform is expected to be produced in large quantities the next year. The stock may respond appropriately if Nvidia provides further information on these or other important topics during the presentation on September 8th. However, given that the tech behemoth just released its profits and met with analysts last week, it's possible that Nvidia provided the most of its noteworthy news at that time. As a result, it might not disclose much more at the next conference. Is it time to purchase Nvidia? Let's get back to our original query. Is it wise to purchase Nvidia before September 8th? Nvidia is currently trading at roughly 38 times forward earnings forecasts, which is more costly than it was a few months ago, but still affordable given the company's potential for profits. Nvidia is a fantastic investment at the moment, but for the following reasons, you shouldn't buy the stock before September 8th. This short-term price volatility won't significantly alter your returns if you intend to hold on for the long run, even if Nvidia's presentation increases the stock. Long-term investing is always the best option. Because it won't matter in the long run, all of this indicates that when investing, take your time and don't rush to buy a stock before or after a specific date. In light of this, investing in Nvidia now or after September 8th is a great idea. A California judge said Thursday that Nvidia must stand trial in a complaint alleging the company utilized stolen trade secrets related to autonomous driving from Valeo, a European auto supplier. Evidence points to the possibility that the business profited from private information stolen by a former Valeo engineer. The case focuses on a 2021 project for Mercedes-Benz that involved Nvidia and Valeo's German division. Employees of Valeo witnessed their own proprietary source code flash on the Nvidia engineer's screen during a video call before he closed it. Since then, that engineer has been found guilty of stealing company secrets in Germany. Valeo claimed that Nvidia had an unfair edge in creating parking assistance technology after taking a snapshot and filing criminal and civil lawsuits. Judge Noel Wise determined that there was sufficient circumstantial evidence to put the main arguments to a jury. She pointed out the notable similarities between Valeo's proprietary files and Nvidia's code, as well as the company's quick advancements in parking technology. Nvidia denied any wrongdoing, claiming that it only used its own internal work for autonomous driving capabilities and rejected the engineer's contributions. From a niche market to widespread use, Nvidia broadened the scope of its main product. Shareholders of Nvidia have endured a number of depressing times. Over the last 10 years, Nvidia has been among the best-performing stocks. Despite having to endure numerous big swings along the way, it turned comparatively tiny sums into mini fortunes. Investors may learn a lot from Nvidia's transformation from a well-known manufacturer of computer hardware to the biggest corporation in the world. Additionally, the stock is continuing rising because of the strong artificial intelligence AI tailwind it is currently experiencing. Since you will be a very successful investor if you can spot the next Nvidia, it's a great stock to research in order to find the next big thing. Nvidia was only worth $11 billion 10 years ago. Therefore, its ascent from that comparatively modest beginning to a $4 trillion giant is truly remarkable. 10 years ago, a $10,000 investment in Nvidia would have been worth almost $3.2 million today. That's an amazing run, but given the nature of Nvidia's company, you would have to be willing to take some significant losses in order to reach those returns. Graphics processing units, GPUs, are manufactured by Nvidia. Originally created to handle gaming workloads, these machines are now also used in fields like Bitcoin mining, engineering simulations, and drug research. 10 years ago, the finest general-purpose computer solutions for handling demanding workloads were GPUs, which should have been the first indication to investors that Nvidia could be a huge growth machine. Despite being specialized in one area, the company's product was easily adaptable to other ones. Had you asked someone 10 years ago if the future will require more processing power than it does now, the answer would have been a resounding yes. But it wasn't a smooth ascent. In 2018 and 2021, Nvidia's GPUs were widely used to capitalize on the burgeoning cryptocurrency market. Unfortunately, it was not a good time to purchase Nvidia shares when those markets plummeted. Investors would have had to wait through the two instances when the stock dropped more than 50% in order to realize all of the gains. But if you persevered through those turbulent days, you would have been rewarded with an investment in a business at the forefront of artificial intelligence, the largest computing requirement in history. With Nvidia's GPUs serving as the main computing power behind this trend, the company's business benefited immensely. The demand for AI computing is unlike anything investors have ever seen. Due to the enormous demand for AI, this led to the last spike in Nvidia's stock price, which helped the 10,000 investment exceed the $1 million mark. It doesn't appear to be slowing down, according to Nvidia's most recent data. The main application for Nvidia's GPUs is in data centers, where a lot of AI hyperscalers are still increasing their expenditures. Nvidia benefits from this, which is why its sales are still rising quickly. Nvidia's sales increased 56% year over year in Q2 FY 2026, which ended on July 27th, exceeding internal projections of a 50% gain. The majority of that strength is derived from its data center business, which generated $41.1 billion of Nvidia's $46.7 billion in Q2 revenue. Nvidia is still a good stock choice since management is still optimistic about the AI rollout and thinks we're just getting started. Even though it's no longer possible to turn $10,000 into $1 million, I still believe Nvidia is a worthwhile investment. Their turns will simply be lower. Nonetheless, it may beat the market over the following 5 years, making it a useful company for investors to research and learn from. Nvidia is still at the top of my list of the best stocks to purchase right now because it's a fantastic combination to invest in. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
And Jeremy, we're down on this first trading day of September, probably because of questions about the tariffs. But I don't know. We're also at relatively high levels. How are you feeling about things right now?
Yeah, and probably because of September,
right?
being historically really the worst month of the year. Listen, certainly we could have a pullback. I mean, I still think the bull trends are intact. I know you guys mentioned the Wall Street Journal article this morning about all-time high, so I took it out and read it, and it said, oh, yeah, it's all-time highs relative to sales. Well, I thought we, value stocks on earnings, not sales. And
right.
We're way, below any all-time high in terms of earnings. Not that it's not an expensive market, but once you take out, and even that article admitted, once you take out the Mag 7, we're only, slightly above a longer-term medium. So I still think this bull run has a place to go. Revisions are still upward. I mean, there's a lot of things that can derail it. I mean, the tariff development is very interesting because I think it's going to go to the Supreme Court, and I think the Supreme Court's going to throw it back to Congress and say, have the Republican Congress say okay, and then it'll go through, and that's going to be very interesting politics, I think, in the second half of this year.
It's just the Senate that would have to sign off on it, right?
Interesting sort of development.
Yeah, I mean, he has control. The party has control of the Senate, of the Congress. We'll see if they would choose to fight him on that or whether they'd say, OK, we go along with what we've seen to this point. But I want to go back to what you just said, this idea that we're at the highest level if you divide by sales. I mean, we mock people when they look at sales. We say that's not the real number. You're right. If we're looking at earnings, that seems like the much more important number to bear out.
And the biggest companies you're talking about, the Mag 7, are the richest in terms of price to sales, probably, too, because of all the potential.
And it's because the margins of those companies are so high. Margins of digital tech companies have always been the highest. So if they're predominant, you're going to get a result such as this. And I think that's built into tech. Tech has very, very high margins because of the way accounting goes and the way globalization and how you can replicate at virtually no cost. All you need is those customers to come. So it's a very different sort of a thing than looking back at a steel company or an auto company. And to put them all together, I think gives a misleading look at the market.
So you're feeling pretty good about things, even though you look at the calendar and see it's September?
Yeah,
And
I mean, again, I wouldn't be surprised. And short run forecasting is hard, but the upward revision of earnings, after it took the hit in April, and we still have to see. I mean, there's a big dispersion. I think one of the biggest dispersions I've seen in GDP for this quarter. I mean, it's true that the Atlanta Fed is looking like 3.5. It sort of shocked me. I think Goldman's still looking at 1.5. J.P. Morgan is sort of in the middle at 2.5, and I've never seen such a dispersion. We're more than 2/3 of the way through the quarter, outside of recession periods, which of course are very different. So I think there's still a lot of questions. Not all those price increases are yet recorded. What is going to happen in the second half of the year? I think that's really the biggest question, and that of course is still linked with the tariff question of the legality and how it's going to flow through to the consumer.
so obviously a lot of questions, but you're still feeling pretty good, and I think we'll take it at that, Professor.
I'm still positive on the market. At this time, of course, any sort of developments could come that could change that. But what I see is still constructive, very constructive.